particular agreement would be listed right there in the remarks section, number 14. Number 15, let's say he had been delinquent, and number 15 would show a date when he was most delinquent. Whatever, if he got up to like $5,000 delinquent and he started paying that down, it would represent the date that he was $5,000 delinquent.
Going back to remarks for 1 second, Jim.
Sure.
If someone had a credit card and actually called the credit card company and worked out a payment settlement, would things like that settlement show up in the remarks? Like they've agreed maybe to take less than the total owed if they paid so much per month, and that kind of thing would show up in the remarks?
That's exactly what would be in there.
Okay.
Yes.
Thank you.
Okay, where were we?
Number 15, I think.
15, yeah, 15 would be the date that this account holder was most delinquent on his account. Number 16 would represent the dollar amount of the consumer's maximum delinquency. So whenever he was most delinquent, the date, 15 would show the date, and 16 would show the amount that he was most delinquent. And then it would also show what his payment rating was at that time. Now, a payment rating would be represented by, this is a automobile loan or installment loan, so it would be an I and then a number. An I-1 would represent the best score possible, and an I, 5 or 6 or 7 might be a bad score. So if he was delinquent, it might show like an I-4 or an I-5.
Is there a range, like is 10 the worst, or?
Yeah, typically 1 to 10.
Okay.
I've never seen a 10.
Okay.
But I've seen 6 and 7s.
Okay.
So, and typically, most people that have those aren't coming for a mortgage, so that's why I've probably never seen them.
Right.
Now, let's go to number 17. 17 is an interesting one. You see all those number ones? There's actually 24 ones there. So, as previously mentioned in a webinar I did a couple weeks ago, the credit score models look at your last 24 months. That's basically where your score comes from. So in the last 24 months, he has made payments on time, and he's had a rating of 1 every month for the last 24 months. So that's represented there. So that's the highest he could get. Underneath 17, you'll see 18A, which represents number of months being summarized. So even though the score represents the last 24 months, or the rating represents the last 24 months, the score looks at the last 29 months. Sometimes that's confusing. I don't typically understand why that number is different sometimes, but it is.
I mean, would that be what the lender requested, the 29 months, or is it just a function of how the payments all were?
It's just a function. There may have been for the last 24. Basically, the last 29 months, ABC is reporting on this. Okay, so that's what it's showing, and he's having an account for longer than that. So there may have been a month or two where they didn't report. So there could be gaps. I mean, you never know.
Okay.
18B is a section where it's going to show if you've been late in the last 30, 60, or 90 days. Obviously, in this report, he's been making his payments all the time, so it doesn't show. And then 19, section 19 in the very top right, which is an I-01, which is the highest rating. That's what you want to look at. That's what typically I always go to when I'm looking at reports, is the farthest top right number. And it's going to show, basically, it's going to tell you everything you need to know when you're looking at that trade line. And I-01 is the best it can be.
So if I were looking at my actual report, would it show account name and then the account like ABC Bank, or is it just going to give you this 1 through 19 without telling you what those represented?
It's not going to tell you what it represents.
Okay, that's why they're so confusing.
Right.
Got it.
So that's why I wanted to break it down this way, so you can take this and you can look at your report and you'll be able to figure out, because that subcode, you see a B and a bunch of numbers, you have no idea what that is.
I think that's why so many people don't read the report.
If that's important or not. You know what I mean? So, and then the EC number 3, the ECOA, what if that said him? And it's really an I. That could be an issue. So you need to look for those type of things. You need to know that they're reporting right on your trade lines.
That's excellent. Thank you.
Okay, great. All right, so now we're going to look at how you can spot errors on your credit report. Now, it's estimated that up to 80% of all credit reports contain some type of error, and 25% of them contain errors damaging enough that it could result in denial of credit. Now, since some creditors report to only one bureau, but not to the others, you should order and review your credit reports from all 3 credit bureaus. Now, look for the most damaging mistakes when you're reviewing your credit report. Look for loans and credit accounts that are incorrectly labeled delinquent. You want to look for loans or credit accounts that are incorrectly identified as being in collections. Any listed accounts that don't belong to you or that you have no knowledge of, even if the report indicates payments are current, you need to look for those types of accounts. Look for bankruptcies, tax liens, or other judgments that don't belong to you or are listed as open even though they have been resolved. Now, you also want to check for incorrect personal information. Look to see if they've misspelled your name. Look to see if there's a name you don't recognize or that shouldn't be associated with your loan or credit accounts. Make sure your Social Security number is correct. Make sure your date of birth is correct. And make sure, if you're married, all the information on your spouse is correct as well. Now, any of these inaccuracies could be the result of human error, or they may represent a red flag for identity theft. So you want to make sure you're keeping a good watch on your personal information. You also want to keep an eye out for other account inaccuracies. You might notice that a mortgage loan that you have might be listed twice on your report. Now, this often happens when loans are sold, but sometimes when they're listed twice, it may make you look like you owe double, and you don't. Look for accounts you closed but are still showing as open. Look for accounts that you're making payments on, but they're not in your credit report. Look for missing accounts. And then also make sure that the credit limits on your accounts are accurate. This is very important because, as we've talked about earlier, your debt to available credit limit ratios are very important to your credit score.
Jim, I remember from our last webinar you talked about some accounts you have, they may not report to the credit agencies. So when you're saying if there's missing accounts here, is there anything that can be done about it if they're not reporting it?
Yeah, I mean, what you can do is, let's say you're fairly new, credit-wise, you just got out of college, and just started your job, and you've got a credit card, or an bank card, or something like that, and maybe a couple department store cards like a Best Buy or something like that you're making payments on. And let's say a couple of them aren't reporting. You want to go buy a house, and you make your payments, and every month, and you're doing a good job, but you don't have enough credit history to qualify. You could contact your creditors and request that they start reporting to the agency. It's up to them, but in most cases, they will do that.
Okay.
And that, within a couple of months, it might be enough to get your score up to where you want it to.
So if you're watching for that, you can get them to report.
Absolutely.
Okay. Thank you.
Mm-hmm. All right. Now, let's say you found some inaccurate information on your credit report. It's very important that you call the agencies and report that inaccurate information immediately. Now, each report will have its own report number that identifies that particular report. You need to locate that report number and then call the number that's provided on your credit report to explain your dispute. Once you've explained your dispute over the phone, I would then follow up with a letter or completed written form and mail it certified with return receipts to all 3 agencies. Now, I would recommend sending them to all 3 agencies, even if only one of them showed the inaccurate information. The credit agencies will then have 30 days to investigate your case and fix the incorrect information. You will also need to contact the creditor or creditors who reported the inaccurate information to the credit agency and explain the error. Now, no one can legally remove accurate or timely negative information from your credit report, but the law does allow you to ask for an investigation of information in your file that you dispute as inaccurate or incomplete, and there's no charge to do this. While many people hire companies to investigate errors or inaccuracies on their credit report on their behalf, anybody can basically do what they do. You don't need a credit report clinic to do it. You can do it yourself, and it's not going to cost you any money. It may be totally free. Now, I've shown here a sample dispute letter that I've had a couple of my clients write. Basically, just like any letter, you want to list your contact information up top. You want to address it to the complaint department of the particular credit agency you're sending it to. And then you want to say, I'm writing to dispute the following information on my file. The items I dispute are circled on the attached copy of the report I received. So it's very important that you either color with a marker or circle the reports that are wrong and send a copy of that in when you send this letter. You also want to identify the item or items that you're disputing by name, such as ABC Mortgage or ABC Department Store, and then identify the type of account it is. Which is it an installment account? Is it a revolving account, or is it a mortgage? And then you want to describe what the inaccurate or incomplete information is and why it's wrong. And then you want to request that the item be deleted or request another specific change to correct that information. You also want to enclose copies of any supporting documentation that's going to support the inaccuracy or error. And again, I would ask them to investigate and delete or correct as soon as possible. This letter's worked for a lot of my clients, and it's pretty typical of what you'll see if you go out on the web and look for other examples. Okay, now let's talk about tips for improving your credit score. I've listed do's and don'ts here. Obviously, under the do's section, you always want to pay your accounts on time, and if at all possible, you want to pay them off every month. If you do this, over time, you're going to really have a high credit score in the high 700s, low 800s. However, if you can't pay your credit cards off monthly, try your hardest to keep balances below 33%. If you keep the balances below 33% of your available credit limit, it actually improves your score. Now, anything between 33 and 50% is kind of a wash. It really doesn't affect your score up or down. But anything over 50% ratio of debt to available credit limit starts to negatively affect your score. So do your best to keep those balances low. Also, if you've got a couple of credit cards that have balances over 33%, I would look at increasing your credit limits on those credit cards. In many cases, if you're a good client, you can call up the credit card company and you can ask them to increase your limits, and they will do that. Now, what I would also ask that you do if you're asking them to increase your limit is to do it without pulling your credit. Sometimes when they go to pull your credit to check before they increase your account, it could hurt your score. So in most cases, they won't do it. If you're a good client, they don't really need to know. You've made your payments over time. They're not worried about it, so they'll just go ahead and do that without actually pulling your credit to increase your credit limit. Another good trick is these credit card companies or any account that reports to the credit bureaus. They typically report once a month. So I would call each of your accounts and find out what day they report to these agencies. And then I'd put it on your calendar to either pay off or make payments on that account a few days before they actually report. A lot of times this can increase your credit score dramatically very shortly.